Alrighty traders, this is Blake Morrow and you are listening to the week ahead video for February 14th, 2001. Now, actually, watch the video first. After you're done watching this video, if you have not went out and bought some chocolates and flowers for your loved one, remember it is Valentine's Day today. So get out, celebrate your loved one, buy him or her some chocolates, some flowers, a nice card, tell them you love them. Don't forget to do that. Thank me later. All right. My name is Blake Morrow with ForexAnalytix, and we're going to talk about what's happening or what happened this last week, what we're looking for in the week ahead. But before I do that, I have to mention, if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days, and you get to try out the premium version. So no matter if you decide to go with the light version or the premium version, you get to try it all for $1. Now, when you do that, make sure we just opened up our integration, and let me move the data flash. This is included with ForexAnalytix. Shows you upcoming news events, and when it happens, it's released. It's just about as fast as Bloomberg. But you'll notice right here in the news feed, we're integrated with LiveSquawk now, or we have been for a while, but you can actually access the audio player and you can hear headlines throughout the trading session overnight in Asia, and it is a cheaper rate than you would get if you went directly to LiveSquawk. So you get a discounted amount. The way it works for us is we received a discount. We received a 20% discount. We could offer it out to to you guys as just an add-on to ForexAnalytix, no matter how you subscribe. But what we did is we passed the savings on to you, which is great, because if you're a ForexAnalytix subscriber and you use the Audio Squawk version, you're going to save 20% of what they would charge, no matter if you're using the light version or the premium version. Okay, it doesn't matter if you're paying $120 a month or $20 a month, $19 a month it is, $119. You still get the discounted amount for LiveSquawk. So try it out. You can take a free service. I just actually launched mine this week, just to make sure it's working correctly. It's great. It's awesome. I love having Squawk services, because if you are, typing an email, you might be looking at something different. You might be, on the phone. You could be in a different room. If you have that Audio Squawk and some important news headlines hits the market, it can grab your attention and pull you back in and take a look at the right right currency or right market that might be moving as a result. So check it out, try it out. It's awesome. Okay, let's talk about before I was going to talk about the cable, and I'm going to talk about it here in a minute. I want to talk about Bitcoin really quick, and cryptocurrencies in general, and let's look at the charts. First and foremost, Bitcoin's bullish, and we are at near the 161% extension of the last move lower, which comes in around 50,000. You got to imagine 50,000 is going to be, this is going to be a really big psychological level. I was just talking to my neighbors. They actually just pulled profits off of their crypto holdings. It's a doctor and his wife, and they're pulling profits because of where it's at and where it's been. They're like, yeah, we made 5 times on our money. We're going to buy a cabin, and it's here. I mean, you're at levels where people are like, okay, well, I can pull some profits here. So 50,000, big deal. Now, I'm not bearish, but I have to also point out we are actually at the 261% extension of the 2017 high to the 2018 low, which, we overshot by, I guess that's, a couple thousand. And that's typical when you get to a key Fibonacci level. And by the way, the 261% extension is a golden fib level, which is important. But when you get to these important levels and you wonder why we're consolidating around here, it's because we are at the golden fib and it does overshoot. If I was talking about a $10 stock for us, if the fib level is at 12, I'm just using that as an example, we might overshoot to $12.13. But we're basically at 12, and it's like here we're 47,000 is the 261% extension. Actually, currently, as I'm speaking, we're at 47,184. So, I mean, we're just consolidating around that golden fib. Now, it's no reason to turn bearish. I would be a little concerned with the current run of Bitcoin if we slump back below this 42,000 level. And we have to take into account the G7 meeting, G7 finance ministers meeting is this weekend. I have to imagine topic of conversation might be cryptocurrency. So depending on what type of comments come out, whether or not there are any hardline comments against crypto assets, you just have to be a little careful, especially after such a prolonged run. And by the way, I'd love to see a move back down into the 30,000, 20,000 range, to be a buyer personally. And I'm just telling you that from a personal point of view. That doesn't mean we're going to get there. What I want and what happens can be, and oftentimes are, two totally different things. Now, let's talk about this last week in equities. So that's really the gist of today's conversation is going to be the equity markets. Well, if you remember, if you've listened to the F.A.C.E webinars, and by the way, let me stop here before I get into what happened last week and what I'm looking for going into this next week. Let me stop for a moment, because if you don't listen to the F.A.C.E webinars, you can find a link in the description of today's video on YouTube. If you're watching the YouTube video, you just click on the link in the description. You can access that free webinar that we do every day. It's called F.A.C.E. Okay, you'll catch myself and the rest of the team. We'll talk about what we're looking at. And one thing that I mentioned is, hey, while we're above 3870 in the equity in the S&P, there's no reason to be bearish. But I'm going to stop here and say, if you guys do listen to our daily webinars, or you do listen to this week ahead video, and you really think it's going to be beneficial to you this next week, do us a favor. Do me a favor. I don't ask for much from you guys. Just give me a thumbs up. Say you like the video. Makes us feel great. Makes me feel great. I truly appreciate it. And if you can share this video on social media, if you saw a tweet regarding the week ahead video, or you saw us on Facebook or LinkedIn, please share. Spread the word. I'd really appreciate it. And I thank you so much for that. Okay. Now, going back to what we talked about last week, and let me click back over to the analysis. And by the way, on ForexAnalytix, you can be following along via live charts if you want. Here, we're integrated with TradingView, so you can actually access your charting through here if you want. I'm going to take you to this one because I can draw on it, and I keep these saved for our team. That's why we have specific colors that we all look at. But let's talk about the S&P. While we're above this 3870, there's no reason to be bearish. And personally, I think that we could stab for 4,000, which is 161% extension of this last move lower. Okay. While we're above 3870, which is right, let me fix that chart. It's right here. While we're above 3870, which is the breakout point, no reason to be bearish. Okay. We are in a megaphone pattern. We are, channel resistance after the false breakdown from a couple weeks ago. But that's currently where we stand. And I think at the end of the week, we saw some squeezing on Friday because probably some shorts that were just, short throughout the course of the week are like, oh, well, you know what? The market's not going to go down. I might as well cover. That just kind of, accelerated towards the end of the day. You just got a lot of short covering at the end of the day. Now, while we're above 3870, no reason to be bearish. And do you know my favorite way to play that via currencies right now is the cable. The cable is extremely bullish. Let's go to a weekly chart in the pound, and let me just show you. This is a multi-year descending wedge breakout. Post-Brexit, the cable has broken higher. Now, I can honestly say it's not as bullish as I'd hope if I was playing the sterling long, just pound US dollar. And that's a product of the dollar index. If you look at the dollar index, I could really argue either situation. I can argue a bearish argument because, you know, once we broke the 93 level, this multi-year trend line, once we broke 93, you're bearish. While we're below 93, we're bearish. I get it. Okay. If you go to more of a near-term chart, we have an inverted head and shoulder pattern. And while we're above, let's just say roughly 90, there's, you know, it's going to be hard being bearish while we're above 90. Also, if you look at this channel, this ascending channel, we're just on channel support. That doesn't mean it's going to last, but you can see why the sterling itself hasn't broken out. But if the stock market continues higher, I think the path of least resistance for the sterling, the pound dollar, the cable, is actually higher. We have a bull flag pattern. You know, I think we can continue to move higher. Now, if stocks reverse and we see the S&P below 38.70, I still like the pound, but I like it against different currencies. I like the pound against the Aussie dollar. Why? Well, let me pull it up a little differently here. Pound, Aussie, and let me pull up a different feed. Let's go to this feed. Okay, and let me delete everything here. Let's go to a weekly chart. Let's zoom out. This is a, well, 2005 to current. You'll notice that we have a big triangle on a weekly basis. You'll notice that we're closer to the bottom of the triangle than the top of the triangle. So if I'm bullish the pound, yet we see risk aversion, that means that the Aussie is probably going to underperform. That means that the pound Aussie is probably going to move higher, especially when we are moving lower in price and relative strength was actually divergent. So I think the pound Aussie is a good possible long if stocks come down. Also, let's take the pound Kiwi. If you look at the pound Kiwi, this is a weekly chart. You'll notice that we had a multi-year trend line here and we broke. That was a few months ago, back in November. Do you notice that there's been very limited downside? So when you break a big technical level like this and there's been very limited downside, guess what's probably coming around the corner? A squeeze, right? So now if we see stocks move lower, I still like the cable. I just like it against the New Zealand. The New Zealand and the Australian currencies are commodity currencies, and they tend to underperform in periods of risk aversion. So when stocks go down, typically people will sell commodity currencies like the New Zealand dollar, like the Aussie dollar, and the pound. Since I'm bullish the sterling as it is, or the cable, the pound Aussie, pound New Zealand are probably the better currencies to trade and to the long side. And if you look at the just like an intraday chart of, this is a 4-hour chart of the pound New Zealand. Let's do this. Let's grab a quick Fibonacci retracement. Let's do a couple of quick calculations. This is the most recent high back in October to the spike low back in December. You'll notice that we're around that 50% retracement. Now let's take this high from August to the low here, and you'll notice that it's the 38% retracement, and it's a confluence. There's a 50% and a 38%. So what that really means to me is if we do break, let me grab this. If we get a solid break above 192, roughly, that's going to be a pretty severe breakout. So, guys and gals, remember, if the S&P starts to see a little bit of a pullback, the pound Aussie, the pound New Zealand, those might be some good longs. If the stock market continues higher, the pound dollar is probably a great currency to be on the long side because it just looks good. So is there anything that could really move the needle this next week? Absolutely, there is. Now, let me say this. If you live in, or if you are Chinese, happy Chinese New Year. It's Year of the Ox. For those of you that don't know, I am half Chinese. I was born in Taipei, Taiwan. I've lived in the United States ever since I was 6 months old, but my mom and my aunt, they've been, and all of us have been hitting us hard with Chinese New Year texts. So happy Chinese New Year for those of you that do celebrate. Now, next week, we do have some data coming out. Like if you are trading the sterling or the pound dollar, we have CPI on Wednesday. CPI has not shown, or inflation has not reared its ugly head in most countries, at least not in CPI as it stands. Doesn't mean we're not seeing inflation pressures, but CPI could move the needle. We also have retail sales out of the UK on Friday. We also have some PMIs, not only out of the UK on Friday, but also out of the Eurozone on Friday. In the US, we have retail sales on Wednesday. So we get to see the health of the consumer on Wednesday and see how the consumer is faring. And one thing that I've learned, try not to bet against the US consumer. Just don't. Wednesday evening, or if you live in Australia and it's Thursday morning, we do have employment data out of Australia. So that's something that we also will have to watch if you have any Australian exposure. So guys and gals, I want to say thank you so much for listening in today. And I want to thank you for, giving us the thumbs up on YouTube, sharing this. The team that puts this together, myself, I truly appreciate it, and I know our team really does as well. So thanks, guys and gals. Have a great Valentine's Day, and I will see you on the F.A.C.E webinar tomorrow morning.